I'm thinking about quitting my job. And I'm doing it because I want to spend most of my time building a platform that I've been sitting on for the longest time. I want that to be the singular thing I'm focused the most on. But this video is not about that platform. This video is not about what I plan to do with my time after I quit. In this video, I plan to talk about some of the things that I had to line up in order to make sure that I'm able to quit my job in a safe and responsible manner. Thing number one, and this applies mostly if you're in the US, is figuring out what your health insurance situation is going to look like after you quit. Look, I want you to be safe, and health insurance, because of how expensive healthcare is in the US, is going to have to be the one thing you make sure you have in your back pocket because life is pretty unpredictable. If your health insurance was sponsored by your employer, most companies, most employers will cover your health insurance through to the end of the month whenever you quit in the month. So in a lot of ways, it may be in your best interest to quit earlier on in the month. Now, beyond this coverage period, you have a few different options. If you're under the age of 26, you can elect to be a dependent under your parents' insurance and go be covered under their insurance policy. But my parents aren't here in the US, so that doesn't really apply to me. You may choose to be on your partner's health insurance policy, or you may go about and purchase a private health insurance off of the health insurance market. But if you really liked the health insurance plan you were on with your company, federal law requires companies to allow you to be on the same health insurance plan for up to 18 months after the employment period through the COBRA Act. However, you will be responsible for paying the full price of the premiums, which were previously being sponsored by your company, plus a 2% administrative fee. So this is actually a pretty expensive option. Number two, strategic timing of your resignation. If you are very close to the performance review period, aka the time when your bonus payments are about to be paid out, you probably want to wait out until the bonus payment is given to you so that you can leave with somewhat of a bag. If you work at a tech company and you're close to the time when your next stock vest happens, you probably want to wait around so that you get the most out of your stock vesting schedule. And finally, if you're tapped into the political musings of your company, you want to be sure that you're not leaving right before a layoff. If you've heard from the political grapevine that there is a layoff that's about to happen at your company, it is in your best interest to stick around a little longer so that you can be laid off as a part of that reduction in force event. There's several key advantages you get to enjoy if you're laid off versus when you quit. Number one, you get a severance package. And during the severance pay period, you're also going to be on your company's health insurance. So this gives you a lot of additional runway to do whatever you were doing, but on your company's dime. If you were laid off, you also may be eligible for unemployment benefits, which you will not be eligible for if you straight up resigned. And no, future employers cannot find out if you were laid off versus if you resigned. The only thing past employers can confirm as part of a background check are the dates of your employment and the fact that you were employed at that company. Okay, number three, planning your finances strategically. The first thing you have to figure out, and you have to do this very diligently, is what is your monthly burn rate, aka how much money are you spending every month? This includes your mortgage or rent payments. It includes any loan payments and interest payments, including loan payments for student loan, car loans, or interest payments for credit card debt. Realistically, there's going to be a lot of expenses that you're not even aware of because the bi-weekly paycheck that hits your bank account from your employer absorbs up a lot of those expenses. So the best for you to get a good picture of what your expenses are is to upload 3 months worth of credit card transactions and bank account statements or other related transaction statements into your favorite AI model or chatbot like ChatGPT and ask it to give you a summary of what your burn rate is. Once you figured out your monthly burn rate, you're going to have to figure out how many months of runway you can afford to buy for yourself based on your cash assets, aka your savings and investments. The two things to keep in mind, though, is that you can't reliably rely on your stock portfolio because the value of that portfolio is subject to change. And you should have a few months of buffer runway in addition to the runway you were planning for doing whatever it is that you were planning to do, because you're going to need that buffer to re-enter the job market, to interview, to apply to jobs, etc. And finally, number 4, and I hope this isn't overlooked, but it is the cultivation of discipline you need to do the thing that you're trying to do once you quit your job. One of the intangible benefits of having a job is that it gives you a lot of structure to your day and it lets you get a lot out of the time you're spending because of this structure and routine. You will need the mental discipline to give yourself the sleep schedule, the diet, the workout routine, and the work routine to make the most out of all of this unstructured time that you have to yourself all of a sudden. Those are all the considerations I have. Let me know in the comments if you've been thinking about quitting your job, and if so, what's been holding you back? Thanks for watching. I'll see you in the next video.